Ladies and gentlemen, good day and welcome to WPIL Limited Q3 and 9 months FY26 earnings conference call hosted by Arihant Capital Markets Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bala Subramaniam from Arihant Capital Markets Limited. Thank you and over to you, sir.
Thank you, Bhumi. Good evening, everyone. On behalf of Arihant Capital, I welcome you to the earnings call of WPIL Limited for Q3 FY26. From the management side, today we have Mr. Prakash Agarwal, Managing Director, Mr. Krishna Kumar Kaneriwala, Executive Director. We welcome the management of WPIL Limited on this call. Now I invite the management to give his opening remarks, following which we will open floor for Q&A. Over to you, sir.
Thank you. Good evening, everyone. It is a pleasure to welcome you all to our earnings conference call for the third quarter and 9 months of the financial year 2026. Let me first take you through the financial performance of the company, followed by the operational highlights. For the quarter under review, consolidated revenue from operations stood at 539 crores, increasing by 41% YOY. EBITDA was 113 crores, up by 134% year-on-year, with EBITDA margins for the quarter at 20.88%. Profit after tax amounted to 76 crores, reflecting a rise of 104% YOY, and PAT margins were at 14.03%. On a standalone basis, revenue stood at 204 crores, down by 6% year-on-year, while EBITDA stood at 49 crores, rising by 38%, and EBITDA margins at 23.83%. Net profit stood at 33 crores, a rise of 61% YOY. PAT margins were at 16%. For the 9 months under review, consolidated revenue from operations stood at 1343 crores, up by 9% YOY. EBITDA was 242 crores, rising by 14% YOY, with EBITDA margins for the quarter at 18.03%. Profit after tax amounted to 153 crores, up by 2% YOY, and PAT margins were at 11.4%. On a standalone basis, revenue stood at 561 crores, declining by 29% YOY, while EBITDA stood at 112 crores, declining by 18%, and EBITDA margins at 19.96%. Net profit 77 crores, PAT margins were at 13.66%. Domestic business. For the 9 months under review, the product business reported a robust 30% YOY revenue growth, driven by stronger margins. Order booking and the order backlog continued to improve, with an order backlog of 428 crores during the period, supported by an exceptionally strong inquiry pipeline. This healthy momentum provides clear visibility for medium-term revenue growth. The company secured a major breakthrough order for 30 megawatt large pumps for the Rajasthan Eastern Canal project, which is a river linking project between Rajasthan and Madhya Pradesh. While project business remained subdued, O&M activity showed a clear pickup, supporting near-term revenue stability. Execution of ongoing projects is progressing as planned, reflecting continued focus on timely completion and commissioning. The order backlog for the project division stood at 2,080 crores. The government's budget allocation of 17,000 crores for 25-26 and an additional 67,670 crores for 2026-27 is expected to provide a significant boost to Jal Jeevan Mission projects. Moving to the international business, international revenues increased to 822 crores for 9 months FY26, representing an 81% YOY growth and now contributing 60% of total revenues. International EBITDA margins improved to 15% for the 9-month period, supported by a strong performance in Q3. The international order backlog stood at 608 crores for the product business and 2,114 crores for the project business. PCI Africa secured large strategic contracts for the Trans-Caledonian Tunnel project, which is about 821 million rand, and the Makassar wastewater project of 1.1 billion, which are expected to drive medium-term revenue growth. Grupo Aturia expanded its position in the water segment in MENA region with new contracts. The Australian business outlook is improving, driven by announcement of new LNG projects, while WPIL Thailand delivered record Q3 revenues, strengthening its competitive position in the Thai market. Visa Italy successfully completed legacy contracts and is now actively pursuing new project opportunities. Eigenbau secured a significant contract in Nigeria, further consolidating its strong market presence in the country. These developments position the international portfolio for sustained growth across multiple regions. With this, we can proceed to the question answer session.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Our first question comes from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Dhanyavad sir, thank you for the opportunity and thank you for providing us the opportunity to interact and also getting the presentation well before the con call commenced. So thank you for looking into our request. Sir, can you just reiterate what was, first of all, I'm audible, sir, to you? Hello?
Yes, you are. Yes, you are audible.
Sir, thank you, sir. Sir, firstly, can you reiterate what was the product order book closing position? You mentioned 1,080 crore.
Sorry? The total product order would be about that much between domestic and international.
Okay, because sir, our slide number 17 mentions at 1,036 crore.
So the product order backlog is 1,035 crores with a split of 41% domestic and international 58.7.
Yes, sir. So I just that's the number. Okay, so the number is 1035, not 1080.
Yeah, 1035. It is 608. I got figure international and 428. So yeah, 1035.
Okay. Sir, and what would be the execution period for this product order book? By what time we will be executing?
It varies across different regions.
Okay, but just taking into account the average, by what time we will be replenishing?
It's not possible because there are different product lines with different requirements. Aftermarket is different, so it is varied. Product order backlog is just what is required. It's robust, so it increases, so therefore there is more opportunities.
Okay. Sir, you have also mentioned in the domestic portfolio about this Rajasthan pump order. Can you throw some more light on the same, on the quantum? And this is the product business itself, about the 30 megawatt large pumps for Rajasthan. And when will this get in the revenue, flow through the revenues?
Actually, we have been discussing regarding river linking projects. So we had supplied river linking projects for the Kaleshwaram project, 30 megawatt, which was successfully commissioned a few years ago. And this is a great breakthrough because this is a new large project in Rajasthan, and we have the pump orders. So this is a product order, and we are executing it for a large contractor.
Okay. And what is the value, sir?
The value is about, I think, 20 crores.
320. And this will get executed over a period of a larger time frame or within short?
Yeah, it is over. These are large projects, large pumps, so they are,
Okay. So now coming to this our non-controlling interest part, sir, if you could explain when we look at our profitability, the non-controlling interest. So can you explain to us, sir, how should investors read into this line item of the non-controlling part, and how are our stake planned in the various foreign subsidiaries, which we have mentioned, I think so, in slide number 6. our group business structure?
I think there is no change. All I can confirm is there is no change in any shareholding structure in this period, and the rest was there in the annual accounts. So you can see from there, it's quite complicated. There are different structures, but primarily we hold our international business through our international subsidiary. So that is, where the non-controlling stake is.
Okay, a very small point, and then I'll join the queue also. So when we look at the non-controlling part, it is 28% of the total profitability. So 75 crore, 75.56 crore is our net profit number, and attributable to the non-controlling interest is 21 crore. That is 28%. So just wanted to understand any steps we are taking to make these subsidiaries into wholly owned subsidiaries, and thereby the entire profit will be attributed to your shareholders at WPIL, or what's the thought process going ahead?
No, it will cost a lot of money. It will cost a lot of money because of the valuation. So I don't know. We will have to review whether it is good for the company.
Okay. And lastly, sir, we have always seen post-monsoon, the period, there is pickup in the project part, and also the deliverables for the product also improve. So taking into account that we are in the final quarter now, already 1 month gone, what should be the likely expectation in terms of the revenue growth that we may anticipate for the year to close, both as a whole? If you could give us understanding, sir.
I think we are on track. I think if you see the 9-month performance, we are on track. The only variable there is the domestic project business, where we have mentioned that yesterday's budget has again given allocation for their contribution, the center's contribution. So that should boost the Jal Jeevan Mission projects. So we wait to see how that plays out. We will know soon.
Okay. And lastly, on the NSE update, sir, listing, when can we expect the listing?
Yeah, we are working on it. We are in the process.
We have filed the necessary documents, or sir, that has not been. What stage are we?
We are in the process. There are certain conditions we have to meet, so we are in the process.
Okay, sir. I joined the queue, sir. But the color, what I'm trying to understand is that if you could just give us some understanding of how we can perform for Q4 in terms of the revenue profile, since now we have a strong international order booking both in the project and the product business. So will that revenue start kicking for the project part also for Q4, or we will be needing preparation time, and that revenue will be kicking in the next financial year? I am talking about the orders in Africa, that 630 crore and 469 crore in the Mozambique, sir.
Yeah, I think the recent orders which have been received and which have a 3 to 4 year time horizon will take some time to come into revenue. So that will be, the recent orders in South Africa would take some time. But the business, as you can see in this quarter, is performing very well.
We can look forward for the same. So this is what the trend should be going ahead.
Sorry to interrupt you, Saket.
Yes, ma'am, I am joining. Only sir's last point on the same.
Let's keep less questions. Too many questions.
Okay, ma'am, sir. I'll join the queue. Thank you once again, and all the best to the team.
Thank you. Our next question comes from the line of Janam Doshi from Chris PMS. Please go ahead.
Good evening, sir. Congratulations on a good set of numbers. Just wanted to understand, what is our current exposure to the JJM, both in terms of order backlog and in terms of receivables. Like, we had around 250 crores outstanding as on 30th September. So what is the current outstanding, and with the increase in the budget allocations, when are we expecting the fund flows to happen?
I think the JJM, as we have been mentioning that we are reducing our exposure constantly, but at the same time, we are reducing our exposure by executing backlog, and we received some funds, but most of that is adding to the outstanding. So we are near 300 crores outstanding. Hopefully, yesterday's announcement, which give mention on both sides. One is for the 25-26, which is February-March, next 2 months, and 67,670 for the next financial year. So this outlook should be translated soon. I'm sure the government is also understanding the criticality of the situation. But I think we should wait for some. I think they have mentioned a cabinet meeting is to be held, so we should wait for that.
Okay, got it. And the new project orders which are being secured by PCI South Africa are also at similar margins, like we'll be able to maintain this 15% EBITDA which we are able to do like overall consolidated basis for the international business?
Yes, that is our business, that is our business model. So between 15 to 20% is our focus area, and all businesses are aligned, as you can see even by these results, which are primarily coming from Africa.
Right. Also, like we have developed products for Navy, like drainage, and there are also specialized pumps which we have developed for LNG. So, like a lot of activities happening on LNG, even in domestic as well as in Australia, as you have rightly pointed out. So, like, what is our outlook like for these particular products, and whether going ahead we expect it to contribute meaningfully to our product business?
Yes, of course. I think, what we are trying to highlight there is that all our businesses are well positioned and completely aligned to their markets. So the Australian market, as we executed a large number of refinery projects. Now these LNG projects, which were on hold for some years, are being restarted. So the outlook is very good there. And in the Indian market, as you said, Navy. So our Navy contracts are proceeding well, and we expect once the new ships are announced, we will get more opportunities there.
Okay. Got it. Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants, please limit your questions to 2 per participant. Our next question comes from the line of Balu Lamkhade from Parami Financial Services Private Limited. Please go ahead.
Yeah, congratulations, Prakashji, for the good set of numbers. I had 2 questions, but it has got answered in the previous 2 questions. So thank you so much for the opportunity.
Thank you.
Thank you. Our next question comes from the line of Sahil Shah from WPIL Ltd. Please go ahead. Sahil, your line has been unmuted. Please go ahead with your question. As there is no response, sir, can we move on to the next participant?
Yes, please.
Our next question comes from the line of Rohan Baranwal from Trinetra Investment Capital. Please go ahead.
Hello, thank you for the opportunity. My question was on the O&M business. The O&M business is actually projected to generate close to 700 crore by FY27. So what kind of margins and capital requirement would be needed for the annuity business? And does this business require dedicated working capital? And how does it contract structure in terms of project business?
So the operation and maintenance activity is post the closure of the EPC part, and most of these projects are between 5 to 10 years to 15 years time frame, where we will be running these projects. This includes there are obviously costs. There are electricity costs and consumable costs and manpower costs. So, but it allows us to be close to the customer and monitor the project for a period, and that is our intention.
And sir, on the margin side, like what is the associated margin for this kind of projects, and how much would be the capital requirement for businesses like annuity, like stream?
So these are not annuities, so the capital is not. These are O&M. They are not annuity.
Okay.
So
Okay.
the ownership remains with the client. They are handing it as a service contract to us.
Okay, sir. And sir, the next question is on the PCI Africa, which has secured a large contract. So what is the pipeline for a similar large ticket projects in Africa and other regions?
So PCI Africa has a very good, strong pipeline for new contracts, and that is what our main intention was by focusing on Africa and building our international business, so that we have, we are well positioned, especially in Africa, to take advantage of the opportunities there.
Got it, sir. And how does WPIL plan to balance growth between engineered products and turnkey project internationally?
Could you repeat your question?
My question was, sir, like how company plan to balance growth between engineered products and turnkey projects internationally?
So WPL plans to focus, to keep balance, as we have been mentioning. So this time, as you can see, one is the balance between the international, which is now 60% roughly, and domestic is 40%, which is a healthy balance, because considering the size of the economies globally. Similarly, in product and projects, our idea of projects was to build this capability where we can offer solutions and we can get involved in the operation, maintenance, downstream areas. And we want to keep it at, the product business would be the core and the project business would be balanced there. So I think we are close to the split we are looking at. And our focus, product business would increase. So I think.
Got it. So one last question. Yes, sir. Yes, sir. One last question. Then I will be joining the queue. Question was, what is the revenue contribution between the O&M and the new projects versus the new projects?
As the business model matures, the O&M from the present projects, as they are getting completed, will keep increasing. And as more and more projects come into O&M, the percentage will go up. We hope to reach a balance in 5 years' time, if you take it outlook, to be at about 25 to 30% from O&M and 70% from new contracts.
Got it, sir. Thank you very much. I will join in the queue.
Thank you.
Thank you. Our next question comes from the line of Mukta Chandani, an individual investor. Please go ahead.
Hello. May I know if I'm audible or not? Hello.
Yes, ma'am, you are audible. Please go ahead with your question.
So first of all, thank you for taking my question. My question relates to PCI Africa's large contracts, which are noted as enhancing medium-term visibility. What is the exact revenue recognition timeline for these projects over the next 8 quarters? How does the margin profile of these large strategic contracts compare to division's historical average?
So the margin profile, as we have mentioned, would be as between the range of 15 to 20% as per our business model. That's our targeted margin profile, EBITDA, as in EBITDA sense. Secondly, execution-wise, the projects vary, but if you take it, they are 3 to 4 years, and there will be a peak revenue, which is at about, we're looking at when about 30%, I think peak revenue is around when 30% of the time frame is executed.
Okay. And for the acquired international entities, what are the specific synergy targets set for FY27? And what is the tracking mechanism? Is there a risk of margin dilution as these companies scale up execution?
Could you repeat your question?
Okay. For the acquired international entities, what are the specific synergy targets set for FY27, like cost, cross-selling, procurement, and what is the tracking mechanism for you?
So all our businesses are in the same sectors. So we are working in either, so the project business primarily works in India, Africa, and say the Middle East areas, and in Europe we work in Italy. So this is the areas of our project business, and the product business primarily works in, say, industrial, which includes oil and gas, energy, and municipal and irrigation. So we work in these segments. They are all in the same area, so that gives us a lot of synergy going forward. And these businesses are very strong, and we are looking at market share increase in most of the markets.
Okay. So my next question is.
Sorry to interrupt you, Ms. Chandani. Please rejoin the queue for more questions.
Okay, I'll join the queue again.
Thank you. Our next follow-up question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. Sir, I missed your outlook for the revenue split between the product and the project business going ahead.
So as I mentioned, that they will be in line with the 9-month performance.
Correct. And sir, what was the contribution of the O&M for this quarter and for the 9 months?
To be fair, it has just started. This year we have started O&M, so we see good traction coming in from next year. As I mentioned, in 5 years' time, from all these projects, we will be up to 25 to 30% of the project revenues.
Right. I'll join the queue, sir. Thank you.
Thank you. Our next question comes from the line of Praveen Jayaraman from Avendus Spark Institutional Equities. Please go ahead.
Good evening, sir. Am I audible?
Yes, you are audible.
So I have only one question from my side. All these international contracts which we, for example, the African contracts which we mentioned in rands, are these entered in in their local currency, and how do we hedge these currencies against currency risks, sir? So this is the question from my side.
These businesses are in those geographies. They operate in that same currency of the geography. So therefore, there is no need for hedging.
Okay. So these are separate companies operating there. So we won't be.
Yes.
But so when we. Sorry, sir. Sorry to
go on.
interrupt. You can go ahead.
I was saying that they are separate companies operating in those geographies. So locally, these are local for them.
Yeah. So this has an effect when we try to consolidate in the Indian numbers. That time the exchange rate would be having an effect for us.
Correct. Absolutely right.
Okay, sir. Okay. So yeah, that's it from my side, sir.
Thank you. Our next question comes from the line of Sahil Shah from WPIL Ltd. Please go ahead. Mr. Shah, your line has been unmuted. Please go ahead with your question. Due to no response, we move on to the next participant. Our next follow-up question is from the line of Jainam Doshi from Chris PMS. Please go ahead.
Thank you for the follow-up. The large projects which we have secured from South Africa, we have gotten the contracts from the government itself, and how is the funding? Are they multilaterally funded, or how is the funding status of the same?
I think South Africa is investing a large amount of money in water, and the government has enough resources for these projects.
Okay, so we have gotten this contracts right from the government itself, right? Yeah. Okay.
Yeah, from different agencies.
Okay, got it. And for the Italian subsidiaries, how is our execution skewed? Q3 and Q4 will usually contribute more than Q1 and Q2, or how is it placed?
I think typically we find Q4 is a strong quarter, but it varies from geography to geography, as you mentioned.
Okay. Got it. Thank you so much. Yeah.
Thank you. Ladies and gentlemen, if you wish to ask questions, you may press star and one at this time. Our next question comes from the line of Rushang Gandhi, an individual investor. Please go ahead.
Hello, am I audible?
Yes,
Yes,
please
you
go
are.
ahead.
So thanks for the opportunity. My question was on the working capital days. So from what I see from the presentation is that our working capital days is 208 days for H1. So just wanted to understand, are we comfortable with it's almost 7 months of working capital? Are we comfortable? And if we want to improve, what is the management looking at? And second question was in terms of revenue visibility. So right now our order book is around 5,000 crores with a quarterly run rate of about 500 crores. So in terms of quality, the management has already highlighted that we are in talks with for some other orders. So just if you could quantify what is the amount of orders under discussion. Those were the two questions. Thanks.
Regarding working capital days, it is higher right now. As if you see the previous trend, that's primarily due to the money which is blocked in Jal Jeevan projects. So hopefully, as we have said, as per budget announcements, this should be relieved in the surely in the next medium term, say 6 months, like 3 to 6 months, and that should give us some relief there and get normalized. And large projects, we are working in Africa. So Africa, there are a lot of tenders and projects, and we have a very strong company there. So I think a lot of good prospects.
Okay, thanks.
Thank you. A reminder to all the participants, if you wish to ask questions, you may press star and one now. Our next question comes from the line of Nirav Sheth from Emkay Global Financial Services Limited. Please go ahead.
Good afternoon, sir. Congratulations. Big improvement sequentially in your numbers. I have a couple of questions. Number one is that now you've got established project business in overseas geographies, which seems to be doing very well at reasonable margins. When you look at the next 3 or 4 years, and you got products and you got projects in multiple geographies, do we get the confidence that in terms of revenue visibility, I know you don't give guidance necessarily, but is it within the realms of possibilities that we can comfortably double the size of the company between 3 and 4 years, which roughly points to somewhere between 18% to 22% growth rate, and you also have got O&M revenues kicking in, which will be sizable. The reason I'm asking you this because there are multiple geographies and multiple product lines, and there are different drivers to each of the business. Your own vision for the company, sir, over the next 3 or 5 years.
Thank you. I think our basic thing which we elaborated a few years ago and again we do now is that we have hit a lot of critical thresholds as far as our businesses are concerned. And today we are very happy and proud to have our international business at 60%, which we have grown over the last 15 years. And it has been a slow growth because it has been on a very consolidated basis. These are now very strong businesses, very well established in their markets. So they will exceed the growth rate of those markets. And similarly, in the domestic business, we had some hiccups over the last couple of years because of regulatory issues. However, we find we are very well positioned again because we stuck to the task at hand and kept executing. So be it our project business, we are looking at good prospect once things get back on track. And the product business, as you can see, is growing very well. So I think the outlook is very, very bright, and we are very excited about the future.
Excellent. Two quick questions. After our experience in terms of executing projects was Jal Jeevan, do you think this is one-off in terms of getting stuck with receivables? Would you explore more opportunities because obviously Jal Jeevan will continue for a few more years? Are you comfortable in terms of trying to secure more projects over there again?
Yes, I think we're waiting for things to normalize. What happened, was a particular case, an incident. Don't want to go into the details of that, but I'm sure it will get normalized. We are all in. This is a very good mission to deliver water to the people, and I think the challenges also was how to do it better. I think agencies have sorted out the mechanism, and we are excited about when things get back on track, and I think that's going to happen very quickly now.
Got it. And last question, sir, and the reason I'm asking this is it's very unusual. I don't recollect many of the companies in Indian diaspora who are able to consistently pull off acquisitions in overseas geographies with any level of success. Very, very few companies, and at the size of the company that WPIL is there, to me it is a reasonably strong achievement. Anything that you can share with us in terms of the checklist or the filters that you use to try and run these acquisitions?
Sorry to interrupt you, Mr. Sheikh. Please rejoin the queue for more questions.
Yeah, just last question.
So I think this has been one of our major strengths. I think we are, there are certain fundamentals which we are following. One is our margin focus. We are very focused on margins, staying in 15 to 20% range, and we are not sacrificing margins for growth, is one. And secondly, we are completely focused on our business. We are aware of all the opportunities in different geographies and product lines, and we have a huge R&D technology support with us, great manpower, great manufacturing facilities. So I think we have a lot of strengths which we leverage when we go across geographies. And it's really, as you said, it's been very heartening for us to see, especially we made 2 acquisitions in Africa and in Italy, 1 acquisition. These 3 acquisitions just about a year time ago, and they are performing well. And then we made some acquisitions in the oil and gas space about 4 or 5 years ago, and they are performing well. So I think it's very heartening and gives us a lot of confidence to keep being aggressive on the inorganic path.
Excellent. Thank you so much, sir, and all the best.
Thank you.
Thank you. Our next question comes from the line of Sahil Shah from WPIL Ltd. Please go ahead. Mr. Shah, your line has been unmuted. Please go ahead with your question. As there is no response, we move on to the next participant. Next, we have a follow-up question from Saket Kapoor from Kapoor & Company. Please go ahead.
Yes, sir. Probably my last question for today, sir. Hello? A lot of noise, sir.
Yes.
Hello? Yes, sir. Sir, when we look at the margin profile for our pumps and accessory segment for this quarter, they are at 32%. So, any one-off in this order book, the product mix was there that has resulted in these margins, or taking into account what the closing order book of 1,038 crore is for the pumps and the accessory segment, what should be the margin profile going ahead for this segment, sir?
I think we should just stick to our focus of EBITDA between 15 and 20% for all our businesses across all geographies. And we've been consistently performing in line with that. In the last few quarters, last quarter, I think it was mentioned that our margin was lower, and we had mentioned that they will be on track. So they are on track now.
Yes, sir. You are absolutely on track. Not only on track, but we have improved upon. Only point I was trying to bring into my consideration was for 9 months also, we did revenue in the pumps and accessory at 750 crore and the bottom line PBT at 204 crore. So that also translated into a 27% margin outlook for 9 months also, wherein we are. So I was just wanted to understand, is this the new product mix because of which we are posting the higher margins, or if you could just elaborate on the same?
Again, the same thing, that we are focused on keeping margins in that profile, and the margins fluctuate, different geographies, different product lines, and we cannot say the timing of it. So,
but these are sustainable numbers.
I think it's best to stay focused on the fact that we keep our margins in that range. Because
yes,
we're talking a longer period of a company.
Right, sir. Only point was just to deliberate was, are these margins sustainable or not? When we have posted for 9 months, that should be the new profile for the sale.
I think, the timing recognition, I'm not aware of that. So I think maybe some projects some orders were executed, sometimes aftermarket is good, some region is good. So I think, it's best to stay focused on the overall picture.
Correct, sir. But we are now poised for better performance going ahead. That should be the sum and substance of what we are being eyeing now, and we should be cementing our position going ahead also. That the feedback we can very well take that clarion call from the management team today.
Okay.
Sir, I was just reiterating the fact. Am I correct on my assumption?
I can only say, you're keeping on repeating that. I think we are in track. The numbers speak for itself, and the outlook, you have all the figures there. And, we mentioned that, but, you have to understand that there are a lot of things which happen over a period of time, fluctuations. So, like, we are very positive about the Jal Jeevan, what we heard yesterday on the budget, and we hope it's realized, but we have been waiting for now more than a year for this. I think that should be kept in mind while being optimistic.
Correct, sir. Thank you once again, sir, and all the best to the team.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments.
Thank you all for participating in this earnings conference call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations manager at Valorium. Thank you. Good evening.
Thank you. On behalf of Arihant Capital Markets Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.